This is my financial disclaimer so I don't get sued. Good morning, good evening, good whatever time it is you're listening to this. I hope you're having a good one. I'm going to be going over the data sets and the technical analysis for the SPY and TLT for December 19th, 2025. And with that said, let's go ahead and jump straight into the data. Now, the 18th was a very busy day. There's kind of a lot to go over, but I'm going to make this video very short as I'm feeling very, very bad right now physically. Okay, getting into it, the continuing jobless claims did come in higher. It was lower than the anticipated, uh, 1.93 million, but it still was an increase. And we also saw the initial jobless claim not have a major increase or anything, but it still kept that elevated 224,000 that the consensus was expecting. Now, the really big numbers were the core CPI year over year and month over month, and the CPI year over year and month over month. Both of those came in very, very, quite cool. We talked about how we anticipated maybe a 2.9% CPI, and the potential of it really sticking to that 3% was, fairly high. I didn't really expect a increase or anything. Sorry if you can hear my daughter right now. She doesn't want to go to sleep. Um, but this was a massive decrease, and whatever the analysts are saying, whatever the forecasters are saying, um, this is extremely CPI data. With that said, um, this goes kind of hand in hand with everything we have been seeing: a weaker labor market, reduced hourly earnings, reduced employment cost index, just a lot of reductions across the board. And that is showing cooling. Really kind of no matter what other narrative is being said, you would not have the Fed cutting the rates and everything going the way that it's going if we had a strong economy. So just be aware of that. Now, data from today, I'm just going to kind of read over my notes really quick. The CPI came in very weak, showing that inflation is cooling by far more than we expected, obviously. The Bank of Japan did a 25 basis point hike. We will kind of go over that in a couple seconds here. The PCE data uh, is tomorrow at 8:30 a.m. We also have the existing home sales data that is coming out at 8:30 as well. And we also have Fed member Williams speaking at 8:30. I'm not too interested in what Fed member Williams has to say so much. I am interested in the Michigan inflation data. Sorry, I said the existing home sales data came out at 8:30. It comes out at 10 a.m. My apologies on that. It's personal spending that comes out at 8:30. So very important data set. Silverliner was talking about looking at the existing home sales data. I think it's important, but I'm really interested in the Michigan inflation expectations. I don't really anticipate them pulling them back too much, just because there still are some hawks in the Fed, but I feel like if they're truly being honest with themselves, they will pull that back quite a bit. Same with the 5-year inflation expectations. I would expect both of those to come down slightly. Now, the Michigan consumer expectations are tomorrow. The forecast for both the expectations and sentiment is expecting neutral, which means the same as last reading. I again disagree with that. I do believe we will be seeing cooler data just because that's what we have been seeing. The trend, unfortunately kind of sticks to one thing until we have a break in that trend. And currently, that trend is showing that we're seeing weakening in the economy. We're seeing, not strength. So tomorrow, very busy day, but again, it is the PC data that's really important. personal spending is going to be very important. That is something the market is going to look at very, very closely. The inflation expectation, the market will look at very closely. Same with the existing home sales. That is very important. I'm just not putting a lot of weight into it right now, just because there's so much other macro conditions and everything going on. And the consumer expectations and sentiment will be extremely, extremely important. Now, kind of going over what main talking points of the Bank of Japan decision rate were. I don't really anticipate anything to unwind until we see the DXY, which is, the US dollar, and the USD JPY pairing start pulling downward. It pulling downward means that there is dollar, there's dollars entering the system, and yen is gaining strength. So those are two things you want to see. Uh, that would show that there is a little bit of unwinding going on. If we continue to see the DXY being elevated, if we continue seeing the USD JPY being elevated, then that will continue the market tightness we've been seeing. Very likely that will continue the Bitcoin selling, as again a high DXY does align with generally selling within Bitcoin slash crypto. So just be aware of that. Um, the dealers have had months to prepare for this downside, so I know many are kind of expecting market to have like some crazy negative 5% day tomorrow. Um, when I traded through the last carry trade, it wasn't an immediate thing. We had the interest rate decision happen, and then I want to say it was a good week and a half before things really started picking up with the selling. So just be aware of that it can take some time. Excuse me. Now, one keynote that I saw from the Bank of Japan, uh, the meeting, was that they said that their real interest rates have still remained negative, even with the current monetary policy, which is the rate hikes. They went from a negative to a positive, and then they have done two 25 basis point rate hikes since then. Now, um, with that said, with their real interest rates remaining negative, that does mean that the Bank of Japan has a lot of work to do with increasing their interest rates. That's how you drive up inflation. So they still have a lot of stimulating in their market to do, or in their economy and everything. Uh, so we're not really out of the woods on this whole unwinding situation until we see some real signals that the dollar is being pulled down, that the USD JPY pairing is pulling down, and that the yen is gaining some strength, and that the JGBs are still selling well. I know that the previous auction did good, but so far from what I've been seeing with the news out of Japan, that currently the um, bonds are not doing so well after the rate decision. So I don't exactly know how to check that on my end. Currently, just it's like them trying to access our Fed websites and everything. It's not so easy to access all their data, but we'll know more about that tomorrow. Now, with that said, tomorrow is OPEX, and it's not just OPEX, it's quad OPEX or quad witching OPEX, whatever you want to call it. It means that's the expiration for all the option durations, and it is also the SPY-X dividend. And surprisingly for us, I did not expect this. I always forget this time of year, but many of our um, ETFs are having their expiration tomorrow as well. So they're having their X dividends, so TLT, HYG, um, many of these different ETFs right now are having their ex dividend, which does pull price downward. Whether we see that turn into continued selling or not, we'll know more after the PC data especially comes out. But really, I'm going to be waiting for the 10 a.m. data as well because that's super super crucial. If you're enjoying this, please check out my Patreon. For just $1 a month, you can join our community chat and access our tools like the Unusual Whale Spot and our own personal GEX and DEX market positioning. My $12.99 premium tier gives access to my personal trades, 2 live classes a week, which are on Wednesdays and Sundays, and direct support from myself. The links to join are below, but you can also join through patreon.com/wooksy. Thank you for supporting me to help you build skills for a lifetime. And very quickly going over the SPY, turning on the daily time frame and the moving averages and Bollinger Bands. Now, we talked about how over basically the last 2 to 3 sessions, we've seen the 5 mile be in a quote unquote bullish position because it was above the 10 mile and the 20 mile to pulling down below the 10 mile and now below the 20 mile. The 20 mile is currently at 678.34, and with today's close being at 676.47, and with the 5 mile currently being at 677.85, it's extremely likely we'll see the 5 mile being at the 677 or below. With the SpyX dividend, whatever the opening price is, you can minus basically $1.80 off of that. That's the ex dividend price hitting. So if we open at 677, then take $1.80 off of that, and we'll be opening up at 674.20, give or take. So just keep that in mind. Now, the max pain for tomorrow, really that's something I try to focus on during major option expirations or OPEX days. However, everything that I've been seeing for tomorrow is mixed. I've been seeing multiple different max pains for tomorrow, ranging from the 666 to the 672, all the way to the 683. So it's hard to really anticipate in terms of the max pain where they want to push that price, but use our gamma tools if you're in the group, and that will tell you, a lot of the story of where they're wanting to pull that price, and that's something we'll be checking on the open. Now, with the 5 mile being below the 10 mile and the 20 mile, that does make the short-term trend bearish. Um, Sorry, my daughter's yelling right now. She does not want to go to sleep. That does make the short-term trend bearish. That does mean that we are within that 20 mile testing range, and if the price pushes down any further, we will see the 5 mile pulling back under the 50 mile. Now, the significance of that is really that um next week, if we see that selling down basically below the 50 mile range, that the 10 mile and the 20 mile would start pulling down underneath the 50 mile. And that would be a very major trend change. Again, we have not had the 20 mile pull below the 50 mile since uh, early April, mid April. So generally, the 20 mile pulls under the 50 mile once every 1 to 4 months. So it's been a while. The market does need to have a little bit of reprieve, even if we're going to be bullish for the upside again. Just remember that this 20 mile range is a very crucial range to straddle. And after tomorrow's data, after the 10 a.m. data, um, that's really when it's time to start taking contracts again, because this week's data was just extreme. Now, it will take some time for the market to price out kind of everything that happened this week, but we can follow Bitcoin a lot for where the short-term trend will go. I'm just going to kind of show Bitcoin really quick. But if we're going to see continued selling into tomorrow, very, very likely Bitcoin will be showing that. Again, Bitcoin is pretty much the easiest liquid um security out there. So if there's going to be a major sell-off tomorrow, Bitcoin will be telling you. And also watch the VVIX. Again, this is not the VIX. This is the VIX Volatility Index. A little different. Um, if they're going to have selling tomorrow, this will pull above the 98, very likely into that 100 something range. If we're going to have major buying, you'll see this pull down below the 88 range. Extremely likely. So really look for that and watch the VIX or the VVIX for that signal. But with that said, going over the SPY and just a few things to keep in mind, and I'm going to turn off the moving averages for a moment and turn on the drawings, is that one, we are below this major consolidation channel, and this is the top. Even though we have been able to pull above this channel, this is still the major consolidation channel top, as this has held the entire weight of the rally to all-time highs multiple times. Um, with that said, we are below the channel, but we are above the major buying channel. If we have a selling day tomorrow, very, very, very likely we will break below this major buying channel again, and then we do not have any moving averages underneath us other than the 200 day moving average, which we're not focusing on right now. However, what is underneath us is the lower Bollinger, and the lower Bollinger aligns extremely well with our bottom consolidation channel. So if we're going to see a major break in the trend, if we're going to see major selling and the completion of this inverse cup, and I will just draw it out because I haven't done that in a while. But if we are to see the completion of that inverse cup, then we will see this major channel break to the downside. We will see the VVIX pick up quite a bit, and we will be seeing Bitcoin continuing to sell off, very likely pushing towards that leg down that we talked about at that 74,000 range. Now, with the bullish or with the bearishness out of the way, um, say the market takes all of tomorrow's data positive and we are able to pull out of this Japanese bank rate hike situation without having to have major sell-offs in equities or anything, then obviously we will reclaim this upper channel, this upper consolidation channel, and then we need to be looking at the 5 mile. Now, the 5 mile again will be basically around that 677 range. With the ex dividend tomorrow, it might pull down slightly, but wherever that level is, just watch if there's buying from that level or selling from that level. It's going to tell you exactly where we're going to go. If we see buying from the 5 mile at this range, that's pretty much telling you that we're going to have a pretty significant bounce to the upside. If we see volatility start picking up, if we see Bitcoin continuing to sell off, if we see, a push in the selling of equities, then the extreme likelihood is that we are going to work our way down towards the lower Bollinger, start working on a new major selling channel, and, doing the whole selling process over again. With that said, let's go over the hourly very, very quick, just in case there's anything interesting on there. Now, one thing to really be aware of here is that this potentially can be a up and handle very, very easily. If we have buying above this, um, upper consolidation channel, then the upside is pretty easily taken. Um, the next gap is essentially at the 683.73. Now again, remember with the X dividend, that will pull down a little bit, but the next gap would be at that range. So, um, if this cup and handle does complete to the upside, we are looking towards that 680 range again. If we see selling to the downside though, we will complete this smaller inverse cup, which again, that'll be part of that larger inverse cup to the downside, but we do want to see more bearish structure, suggesting that we are going to be pushing downward if we're going to actually see the selling to the downside. Um, yeah, that's the SPY. I'm not really anticipating any crazy upside buying from this. I do think that the macro conditions overall definitely should be weighing against the upside equities a little bit. So the likelihood, I do believe we will be seeing some selling, but there are a lot of strong reasons to see buying just from technical and mechanical reasons that again, we're at multiple major bounce points. So if those bounce ranges are taken, then the upside is going to be pretty large. Now, very quickly for TLT, we are having the ex dividend hit. I believe it's 35 or 36 cents. So it's not super, super high. Um, Currently, the overnight price action has TLT down 0.71%. With the ex dividend taken off of that, we're only down about 27 cents, which that's not great. But tonight's today's price action doesn't matter a whole lot unless we see major selling to the downside, because so far, we have been seeing our bullish structure. The red circles here, these are the lower Bollinger moves where, again, at each of those lower Bollinger moves, we have seen major buying to the upside. I don't really have any expectations for that to change here. I fully anticipate continuation of this bullish structure, seeing this inverse right shoulder build outward, and from there bouncing back up to the 90 range, because now we have to complete this cup to the upside, and from completing that cup, form a handle, and then we can reach that 92 again. And that's really what we're targeting by the end of December. If we get that range, if we don't see some major breakdown towards that, 84 range, we don't break this major channel or anything, then everything is telling us that very, very likely we will see buying from the bottom of this consolidation channel all the way to the top, because that's generally how consolidation channels work. You buy from the bottom to the top and sell from the top to the bottom. So with us being at the bottom of this consolidation channel, with us bouncing so far off of the bottom of this major buying channel, with this being a lower Bollinger move on the daily time frame that did have a bounce, the upside is looking extremely strong. And with the whole Bank of Japan decisions and everything, with what we've been seeing with the data sets, a lot is telling us that we will be seeing buying in the treasuries extremely, extremely soon. Now, again, what we're really looking for from the treasury standpoint is that we want to see and I want to put this on a 5-year time frame. We want to see the 2-year really start to drop. Okay, so really what we're targeting with the 2-year, and it really has been breaking new lows each and every time, so that's good. But we really want to see it basically drop down to that 2.8, um, potentially even that 2.4% very, very soon. And it'd be almost within a few candles. I mean, it would look like pretty much just a straight drop down. Same with the 1-year treasury, all the short end, we're really anticipating a large drop because that's kind of the process of the bear steepener that we're at right now. We're at the most tightened phase where essentially once this phase is hit, we're just waiting for 100% confirmation that the labor market is crumbling and that the upside risk is not inflation and that it's the labor market. Um, when we continue to see weakening of inflation, we'll continue to see again all of the data sets we have been seeing. This heavily supports the Fed moving into a ZERP stance, which means that they want to very, very, very quickly pull down the rates. That's what I expect to happen. I don't really expect the 10-year to have a massive drop until that occurs. That's kind of the first step that needs to occur is that we need to see the short end have a really, really massive drop from this point. Now, I know with the bull steepener, we've been expecting the short end to pull upward with the long end, but now we're at the point where we're expecting it to drop off. Um, you can watch last night's video for some of the correlation on that, but the difference between the 10-year treasury yield minus the 2-year right now is extremely elevated. And when it's elevated, that's really when you get that drop off phase. So that's what I'm really looking at TLT, but I'm not looking at anything in terms of a 0 DT for tomorrow or anything. Now, I do still have positions against HIG. I am still very bearish on HIG. I think that all of the market conditions and the data sets and everything really, really suggest that we will see a massive pull down in the short-term yields. And once that happens, HIG pretty much loses a ton of value very, very quickly. I know many have contracts expiring on the 19th with me. I will be extending a lot of contracts out all the way to March because I will be catching this downside. So that's just that. Um, the government shutdown really kind of threw a wrench in the whole process, and I can't change that. But going off of our technicals and everything else, it does suggest that we are about to see something very, very huge hit the markets very, very soon. So yeah, I'm gonna end tonight's video here. I know I don't sound the best right now. I apologize for that. But um, just trade tomorrow very safely. I personally don't like taking a lot of short-term contracts on OPEX days because OPEX days are days where all the dealers have to align on a single strike, and generally that's pretty predefined. If there's any sort of battle between the strikes, then the dealers are going to be chopping people up very, very badly. Generally, on OPEX days, you don't see the contract IV run very well just because there's so many contracts expiring. Um, so it's just not a day that I enjoy trading so much. But again, it is a day that I will be opening up some of those longer term straddles, and I will be taking some longer term HIG positions. But with that said, I hope everyone has a great day tomorrow. Um, Again, I would be de-risking from a lot of my tech positions. If you're within tech equities, I would be very, very, very cautious holding them right now. But yeah, with that said, I hope everyone has a great day. Have a great weekend. Thank you all for watching. I always appreciate it, even if I don't get the chance to say it in every video. Um, and yeah, I look forward to next week and going over everything with y'all. So yeah, I'm gonna end it here. I'm pretty much dozing off because I'm just not doing well right now. Thank you, and I will talk to you all later.